Hi, I'm Ant Joblin and welcome to IP Go, the show where we take a look at the IPO world, past, present and future. As the coronavirus lockdown continues, we know that traditional IPOs have ground to a halt, despite markets staying open. There are a couple of Chinese offerings on the docket, but in the current climate, it's not too surprising that all 6 China-based US listings this year are trading on average 29% below their offering prices. However, where necessity dictates, creativity prevails. And today we're going to take a look at an IPO that isn't an IPO per se, but a 3-way listed merger. DraftKings, the Boston-based fantasy sports betting company, is expected to go public this week through a reverse merger with Diamond Eagle Acquisition Corp, a blank check company, and SB Tech, a gaming tech company. The 3-way merger outlined in a deal announced in December will value the new company at about $3.3 billion, according to the prospectus, and the SEC declared the registration statement effective on April 15th. Diamond Eagle, a special purpose acquisition company, or SPAC for short, has scheduled a virtual stockholders meeting for Thursday, April 23rd for a vote on the 3-way merger. This was supposed to have happened sooner, but was postponed due to the ongoing crisis. The new company will be renamed DraftKings Inc., with DKNG proposed as the ticker symbol. This is a NASDAQ listing, and the new firm already has a $304 million investment set up for when the IPO reaches completion. As the coronavirus mandates a ban on large gatherings to contain the virus, gamblers have been starved of options to indulge in the practice. In the absence of the usual available games, high rollers have been betting on Eastern European table tennis. It's not been smooth sailing, however. Recently, SB Tech was the victim of a high-level cyber attack, and Diamond Eagle is demanding that the firm set aside $30 million to cover potential liabilities stemming from the breach. According to a recent filing with the SEC, the SPAC would gain access to another $70 million in cash and equity if needed to cover costs related to the hack. Now, it's all well and good finding a way to market, but investor demand has to be there for it to be a success, and herein lies the quandary. If investors gloss over the pandemic, DraftKings isn't yet profitable, and as 2019 showed, markets are increasingly intolerant of money-losing young companies. On the other hand, DraftKings is already rumoured to be a takeover target. It essentially has a daily fantasy sports duopoly with rival FanDuel, and is a major player in the US sports betting market, the fastest growing in the world. The company has operations in 8 countries and operates sportsbooks in Indiana, Iowa, Mississippi, New Hampshire, New Jersey, New York, Pennsylvania, and West Virginia. Colorado could soon join that list too. This is an IPO that requires careful consideration before placing any bets. So, as usual, make sure you do your own due diligence before making any investment decisions. Stay safe and have a good week.